Preface. Wall Street is a street comprising of 8 blocks in the lower Manhattan region of New York City. It is the original home of the New York Stock Exchange and is known for being the headquarters to some of the most powerful U.S. brokerages and investment banks. The influence this street had on the world led to the eventual use of Wall Street as a metonym for the financial market of the U.S. as a whole. The entire American financial services industry is recognized as Wall Street now, even if the firms may not be physically located on the street. With the presence of the Wall Street in New York City, the city has become the most economically powerful city of the world and is known to be the leading financial center of the world. The city also houses 2 of the largest and most renowned stock exchanges of the world, Nasdaq and the New York Stock Exchange. Many tourists visit the street to witness the magnitude of its power as investment bankers, brokers and traders go about their business. The street is known to be very busy for most of the day, with many tourists clicking pictures of the place to take home as memory. Introduction. With a wall that was erected in 1653 by Dutch colonists to protect themselves from the British and the Native Americans, Wall Street came into existence. Even after the wall was taken down in 1699, the street retained its name as Wall Street and became the centre of trade in the city. In the late 1790s, Wall Street firms started issuing publicly traded investment. This was also the time when the New York Stock Exchange was established. After World War I, Wall Street and New York City became the most significant financial center of the world. Till this day, Wall Street is home to some of the world's most powerful financial organizations. Top investment banks and brokerages are still found on Wall Street, along with the New York Stock Exchange and the American Stock Exchange. As globalization takes place, the term Wall Street has gained global recognition and it has come to be used for financial institutions around the world. While Wall Street is seen as a symbol of financial power amongst most people, many Americans associate Wall Street to power politics and elitism. This is probably what gave rise to the Main Street, which is a metonym for small businesses, individual investors and employees. Comparisons between Wall Street and Main Street are very frequent, with reference to the objectives, desires and motivations of the people on both sides. Where Wall Street is the more popular and awe-inspiring figure, Main Street is more about the simple trader or the lesser-known businesses. History of Wall Street. Wall Street has a storied history spread across the last few centuries. There are different accounts of how the Dutch, who had settled in the area, named the street de Walstraat. One of the most popular and accepted versions is that the Dutch built a wall on the northern boundary of the New Amsterdam settlement in order to prevent the British, Native Americans and pirates from reaching the settlements. Some also claim the street's name has its origin in the 30 Walloon families who were among the first settlers in the region in 1624. Around the 1640s, the colony has picket and plank fences which marked the plots and residences. The Dutch West India Company sought to strengthen the wall and create better fortification. For this purpose, African Americans and white colonists worked in collaboration with the city government to construct the 12-foot wall. The street ran from Pearl Street, which was the shoreline, then to the other shoreline, which is Trinity Place in today's map. From there, it took a turn south and continued along the shore till the old fort, where it came to an end. Local traders and merchants of the time picked specific spots from where they would sell share and bonds to the investors. Some of them worked as auctioneers, while others worked as dealers. People could also come to Wall Street to hire slaves for the day or the week. A rampart where the activity was carried out was taken down in 1699. Wall Street was declared as the official slave market for selling or renting African and Indian slaves by the New York City Common Council in December 13, 1711. The street has a buttonwood tree where traders and speculators came together to trade the securities. They found it easier to be in proximity to each other. The Buttonwood Agreement of 1792 helped the traders chart a formal agreement which laid the foundation for the New York Stock Exchange. Traders had created the agreement in order to give a better structure to the market and do away with manipulative auctions. It was also meant to introduce a commission structure in trading. The country's first presidential inauguration was held at the Wall Street in 1789, when George Washington took the oath of office from the balcony of the Federal Hall. With businesses beginning to recognize Wall Street as a financial center, fewer residences were left on the street. When Erie Canal was inaugurated in the early 19th century, New York City became the only major eastern seaport which provided direct access to the inland waterways in order to reach the ports on the Great Lakes. The Wall Street by now had gained the reputation of being the money capital of America. The authorities in Washington, D.C. found it difficult to regulate the street then because of the fact that Wall Street had created its own set of institutions and standards which was followed by the firms on the street with very little interference from outside. By the middle of the 19th century, most of the residents of Wall Street ended up moving further uptown since the lower tip of Island was flourishing as a business center. Even the Civil War helped in increasing the profitability of Wall Street, and New York was recognized as the nation's banking center. The economy experienced a shift from agricultural to industrial and then to financial. During all these changes, New York happened to be at the helm of all changes, and in comparison with the rest of the world, it stood second to London as the world's financial center. The Wall Street Journal came into existence in 1889. Named after the actual street, Wall Street is now one of the most influential business newspapers published in New York City. J.P. Morgan and Company had their headquarters on 23 Wall Street, which was known as the Corner. It is said that this address was not just the geographical center of the street, but also the financial center of America during the 19th century. On September 16, 1920, Wall Street witnessed a bomb explosion close to the corner of Wall Street and Broad Street, which happens to be the busiest area of the street. 38 people lost their lives, while 143 were injured in the explosion. The offenders were never identified. The area continued to be subjected to a number of threats. Wall Street was at the peak of its success, and the financial markets were flourishing in September 1929. On October 3, 1929, the market started experiencing a downfall. Prices continued to slip through the week. On October 24th, just a few days after Yale economist Irving Fisher had comforted nervous investors saying that their money was safe, the stock values plummeted and the nation slipped into the Great Depression. It was an extremely miserable time for Wall Street. A quarter of the working people had lost their jobs and investments held no lure any longer. The financial district came to a near standstill, and it took a very long time for the country to come out of the Great Depression. Having learnt its lesson, the government came up with a number of rules and regulations which would prevent situations that led to the Great Depression. The government gradually started to ease some of the regulations to improve investments. The economy experienced growth again, and it began to prosper by the 1960s. Trading became normal once again, and by 1967, trading volumes rose to 7.5 million shares a day. Reforms helped in improving the quality of trading and competition in Wall Street. The SEC eliminated fixed commissions and later ended the rule which limited stock transactions to the big board's floor only. Electronic methods were gaining popularity and overall prices lowered, which meant that more people were able to take part in the stock market. By the 1980s, the market was prospering, and the abundance of money in the market saw a drug culture emerge among the people of the region. 1987 was another year of recession. The stock market plummeted, and Manhattan saw almost 100,000 people lose their jobs. Telecom became relatively less expensive, and so firms started to move away from Wall Street to areas which were more affordable. During the recession of 1990 to 1991, many buildings in Wall Street stood empty and office vacancy rates was high. Construction of the World Trade Center started in 1966, and when it was completed, the center had troubles finding tenants. Some well-known firms purchased space in the World Trade Center, which was quickly becoming a landmark for pedestrians and for drivers. The impressive height of the building soon garnered attention of the firms, and it gradually became the center of the financial district. The city of Manhattan struck a $900 million deal with the NYSE to keep the stock exchange from moving to New Jersey. During the same period, Nasdaq, which was NYSE's competitor, moved its headquarters from Washington to New York. By the 21st century, NYSE had become the world's largest and most prestigious stock market. Wall Street was thriving, but things took a downturn once again with the September 11, 2001 attack, which destroyed the World Trade Center. The physical destruction was huge. Many people had lost their lives, and some of the best office spaces on the Wall Street ceased to exist. Determined to show resilience in such times, the NYSE opened a week later on September 17th. The attack had created fear among many firms who quickly moved from Wall Street to other cities like New Jersey, Chicago, Denver, and Boston. Some of these relocations were temporary, while others were hastened. Paychecks, after the September 11th attack, grew smaller, and many brokers were paid only through commissions. The loss of the World Trade Center encouraged construction with a new zeal to reinstate the early admiration of Wall Street. The federal, state, and local government provided tax incentives to encourage development in the region. Between the year 2006 and 2010, Wall Street was experiencing a lot of problems. Unemployment was on the rise, and house prices were dipping, and national debt was increasing. The financial crisis of 2008 was the result of dodgy mortgages being hawked by the financial institutions. It was difficult to put all the blame on one person, since the market had been flooded by toxic mortgage-backed securities, which eventually led to the financial crisis. By 2010, the government got more stringent with the rules in order to prevent the same situation that led to the financial crisis. While investment banks were not particularly pleased by some of the rules that came into action, it helped in bringing assurance to the investors and increasing the level of investments once more. Today, Wall Street continues to inspire awe among visitors and people all over the world in being one of the most influential streets of the world, which also became synonymous to financial markets of the United States as a whole. Wall Street as a culture. The popularity of Wall Street as a metonym has surpassed its popularity as the physical street. Wall Street is representative of the economic and financial status of America. Many people of the United States find Wall Street to be a symbol of greed and power politics. The people of Wall Street are represented as self-interest people who are often painted to be deceitful by the media. However, this is not always the case. While some financial firms have been found guilty of undue gains and responsible for sudden market falls. Wall Street investors, however, are unfazed by such assumptions. They strongly believe in their reputation created by the public. Keeping in mind that in the United States making money is considered to be of prime importance, Wall Street has been able to maintain an awe-inspiring image. People who know how to make money are considered respectable. Being experts in the field of money, Wall Street employees value their acumen and hence often find their acts of greed to be justifiable too. Wall Street workers also find that they are a part of an extremely volatile market which increases the risk of losing their jobs. This is what compensates the high salaries that they get. The Wall Street is the nexus of major changes that take place in the financial markets of the US and sometimes the world. It provides advisory services to most of the Fortune 500 companies. The employees of Wall Street see themselves as people of power and often find themselves to be at the top of the hierarchical ladder. The value system followed by the people of Wall Street is one that makes complete sense to their work culture and also resonates with the values of the people of the United States, where individual power, prestige, and social practices that are motivated through self-interested are common. A number of people who are associated with the Wall Street have become famous. They may not have a lot of popularity in the outside world, but among the people of the Wall Street community, they are respected for the strategies they created, the regulatory activities that they have been a part of, and the kind of financing abilities that they have displayed. Some have also gained popularity for the scandals that they have been a part of. Overall, the culture of Wall Street is one which is very different from the rest of North America. After all, the financial district is one of the most powerful financial centers of the world. It is often said that the lives of Wall Street workers involves a lot of stress, irregular working schedules, and instability. Huge paychecks somewhat compensate for this, and the fact that they contribute to the functioning of a powerful financial system validates the culture they follow. Even after the last financial crisis, Wall Street has shown tendencies of being somewhat frivolous with the ethical issues that have been pointed out earlier. The federal government has been keen on changing the culture of Wall Street to ensure that the financial center of the United States encourages ethical and transparent financial activities which can increase the trust of the people and reduce the chances of falling into the same situation as the early financial crisis faced by the market. Architecture. Wall Street happens to be one of the old streets in the city. It has its origins in the early 1600s when the Dutch erected the wall to keep away Native Americans and the British from their colonies. Trading flourished during the period, especially because of the many ports in the region. It was common to find traders flocking the street to carry out their daily activities. This gradually built a reputation for Wall Street of being the centre of trade. The street has lived up to its reputation till this day as it continues to be one of the most renowned financial markets of the world, and the name Wall Street is now used metonymically for all the financial institutions in the United States. Since the streets in the area had been laid out way before the Commissioner's Plan of 1811, you will notice that it has narrow streets which barely allow single-lane traffic. These small streets have often been blamed for accidents in the area. The following are some of the most important and landmark buildings on Wall Street. First, 1. Wall Street. The place where Broadway Street interested with Wall Street was considered to be the most expensive real estate in New York. Irving Trust Company commissioned Voorhees, Gmelin and Walker to build the 50-story building which serves as a landmark in the region today. It follows the architecture of the period where it was mandatory for buildings to be shaped like ziggurats in order to allow air and light to reach the streets below. Irving Trust took possession of the building in 1931, a time when most of the country was going through the period of Great Depression. When the Bank of New York acquired the Irving Bank Corporation, it decided to move its headquarters to the reputed address of 1 Wall Street in 1988. Second, 11 Wall Street. One of the many New York Stock Exchange buildings sits on the corner of Wall Street and New Street. It is a 23-story building which follows the regulations of the 1916 Building Zone Resolution of New York to allow light and air to the streets. This is why you will notice setbacks in the building starting the 10th story. Since the merger of NYSE with Euronext NV, NYSE Euronext has its headquarters in 11 Wall Street. The building has some architectural similarities to other NYSE buildings on Wall Street. The use of Georgia marble and 2 Doric columns is one such example. Third, 14 Wall Street. This address was earlier the Bankers Trust Company building. Located at the corner of Nassau Street, it was designated a New York City landmark in 1997. But that was long ago after the Bankers Trust sold the building in 1937. The pyramid on the top of the building is a notable part of the downtown skyline. Fourth, 23 Wall Street. With just 4 stories, the building on the southeast corner of Wall and Broad Street looks comparatively low, but its thick walls and fortress-like image radiates self-assuredness. Owned by J.P. Morgan and Company, this building is placed on an important piece of real estate. The building was built to support 10 times its current height, so if a skyscraper will be required to fulfill the future needs of the firm, then the foundation is already laid for one. The building is part of the downtown condominium development, and the low roof of the building has a garden, a children's pool and a dining area. Fifth, 26 Wall Street. The grandiose of 26 Wall Street makes it one of the most popular buildings in the area. It serves as a U.S. Custom House, a sub-treasury, as well as the Federal Hall National Memorial. This building is also famous for its mention in American history. It is the place where America's first Congress wrote the Bill of Rights. The Federal Hall is also remembered for the fact that George Washington took the first presidential oath of office here. Washington's statue stands outside the building, while the stone slab on which he stood is preserved in the rotunda of the building. Sixth, 40 Wall Street. Known as the Trump Building, 40 Wall Street has an interesting history. It was erected by the Manhattan Company as its headquarters. It is 927 feet high and has basked in the glory of being the world's tallest building, albeit for a short period of time. Competition for being the world's tallest building was on the rise in the area as construction was in momentum in Wall Street. The Woolworth Building was the highest with 60 stories before this building was constructed. Upon completion of the building, it had 71 stories, making it the tallest building for approximately a month before Chrysler Building installed a spire that made it the tallest building. 11 months later, both the buildings ceased to be the tallest when the Empire State Building was completed. Seventh, 55 Wall Street. The lower half of the building was constructed in 1842, while the upper half was built in 1907. The lower half is currently occupied by Merchants Exchange Building, while the upper half belongs to National City Bank. The building has strong columns which emulate power and exceptional beauty, making it one of the landmarks in the area. Eighth, 60 Wall Street. Built in postmodern style, the 50-story building at 60 Wall Street was the largest corporate building to be built in the financial district when it was completed in 1989. It earlier served as the headquarters of J.P. Morgan and Company, but was bought by Deutsche Bank in 2001 for $600 million. It is the last remaining major investment bank that currently has its headquarters in Wall Street. Ninth, 120 Wall Street. The 34-story building is currently leased by the American Sugar Refining Company. The most notable piece of design on this building is the shiny metallic screen of diagonal themes which dictates the entrance on the Wall Street side of the building. The New York Stock Exchange remains the most important part of Wall Street. This is probably the reason why the city authorities offered a substantial amount of money to NYSE in order to continue its operations in the city instead of moving to another area. The importance of Wall Street. Wall Street has been able to build its image as the economic engine of the country. It helps a number of people in New York City in terms of salary, bonus, and taxes. The street plays a major role in the economy of New York as well as the United States. A fall in the economy of Wall Street can have grave effects on the overall economy of the city and the country. The 2008 financial crisis was an example of the effect Wall Street losses can have on the economy of the United States. It meant that money people lost their jobs and the affordability of homes, clothes and food was difficult. Wall Street as an economic engine of the United States. Wall Street is complex. Not just the street, with its skyscrapers and power-emulating buildings, but also the work that is conducted within. Many feel that Wall Street is also about greed, but there is so much more happening inside those buildings, so many jobs that are secured by the work done in Wall Street and the manner in which the market runs through it. Here are a few important functions that make Wall Street critical for the economy of the country. Raising capital for firms. Being the financial center of the country, Wall Street employees work relentlessly to support the growing needs of the economy by advising firms on how to raise capital and also supporting them in doing so. The firms at Wall Street price and sell stocks to the investors and also help companies meet their financial challenges in various ways. An absence of capital or such advisory services can reduce the ability of firms to grow effectively. If growth did not happen in the economy, it eventually affects us all. Stagnation in an economy can result in lower job creations and less technological progress. Making funding available for debt markets. Funds must be made available for the loans and credit requirements of the country's people. Banks do not have adequate money available through deposits to meet all funding needs. This is why investors are needed to make funds available for the debt markets of the economy. Investment banks help in making such investments available by creating attractive deals for the investors. It ensures the smooth flow of funds which can run the economy with lesser hiccups. Making markets and providing liquidity. Stock traders in the Wall Street help by making markets and ensuring market liquidity. They are able to do this by buying stocks from people who want to sell them and then selling those stocks to investors who are willing to buy them. Transactions like these occur within seconds on the trading floor. In the absence of the stock traders, such transactions can take extremely long and it may reduce the profitability of the transaction. This can reduce the amount of capital that is invested in such transactions at this time. Lesser investment means that firms will receive lesser capital and growth will slow down. Managing investments. Many businesses and individuals require advice regarding the investment they make. Wall Street's bankers, traders and salespeople ensure that investments are managed effectively for everyone who wants to invest. Some investors may not invest at all if they did not have the expertise of the Wall Street officials to guide them through their investment. Investment managers aim to put the client's money in the securities which are most profitable. This ensures the investment is helpful for everyone. Investment advisors help in increasing the growth opportunity of firms, which in turn help in the growth of the economy. Global Bellwether. The stock market is in most ways an indicator of the status of the economy, and the same is true the other way around. A flourishing economy helps the stock market do well, and a positive stock market drives the economy to do well. But when the stock market is negative, the symbiotic relationship shared by the stock market and the economy results in adverse conditions for the economy too. The Wall Street crash of 1929 had led to the Great Depression, and similarly the 2007 to 2008 financial crisis led to global recessions. At times, Wall Street prices plummeted without having a substantial effect on the economy, like the crash of 1987, which was relatively short-lived. However, overall, Wall Street has played a pivotal role in indicating the condition of the economy of the United States at various points in time. Criticisms surrounding Wall Street. Wall Street has had its own share of criticisms. Some of the criticisms may even be validated because of the way the street works. First, Wall Street is rigged. Being the financial center of the country and being one of the largest financial markets in the world puts Wall Street in a critical position. With large and renowned financial investors occupying the area, it is difficult for Wall Street to stay out of scandals. While most of the functions carried out at Wall Street is fair and on a level playing field, there are various accusations on popular people of Wall Street of having manipulated the market or of insider trading, which may be the reason why people seem to believe that Wall Street is rigged. Second, it motivates skewed risk-taking. The financial industry has suffered substantially because of the skewed risk-taking behavior of Wall Street. Traders are often able to make windfall profits if the bets are placed right, but the losses may not be as impactful if they go wrong. Excessive risk-taking had led to the events which caused the financial crisis of 2008. The country suffered excessively, and the global financial markets also felt the repercussions of the crisis. This is the reason why such activities have been heavily criticized by the public and the media. Third, Wall Street derivatives are developed with self-interest in mind. In 2002, Warren Buffett warned that the derivatives which were being developed and marketed by Wall Street are financial weapons of mass destruction. It turned out that his predictions were true, since the market eventually suffered great losses during the financial crisis. Many jobs were lost, and the standards of living for people around the Wall Street region lowered. The entire country felt the impact of the crisis, which was caused because of the US housing collapse that put mortgage-backed securities into free fall. Fourth, Wall Street can cause a fall in the economy. The Wall Street has been responsible for two major periods of recession. The Great Depression and the financial crisis were caused because of the risk-taking behaviors and unethical activities carried out in the firms of Wall Street, which impacted the entire nation and, to some extent, economies of the world. During both periods, people of the country had to suffer a lot, and many firms went out of business or were acquired by bigger organizations. They served a huge blow to the economy, and it took a lot of time and effort to recuperate from the fall. Fifth, it creates envy and anger. The million-dollar paychecks taken home by many Wall Street officials is the cause of envy and anger among many citizens, especially in the aftermath of the last recession period. The Occupy Wall Street protest was one example of the fact that people were not happy about the income disparity between them and the Wall Street officials. The slogan of the protesters was, "We are the 99%, meaning that the income gap was a factor in the social friction among the Wall Street employees and the rest of the people. The goals of the OWS protest was to have a more balanced distribution of income, to reduce the influence of huge corporations on politics, and to bring reformation among the banks. Sixth, it is disconnected from the real needs of investors. A number of times it has been found that Wall Street officials ended up thinking more about making profits for themselves rather than working in the interests of their clients. The firms manipulated information to increase profitability, but eventually lost when the market fell. One of the biggest examples are the mortgage-based securities sold before the financial crisis, which led to the events of the crisis itself. It is also criticized for having a number of middlemen who are paid handsomely even though they may not be generating a lot of value for the economy. This is in contrast to Main Street, which is small businesses working entirely towards the interests of their customer. Wall Street versus Main Street. Where Wall Street is known for its opulent buildings, powerful firms and scrupulous officials, Main Street has an image which is completely opposite. If Wall Street is known for huge paychecks, then Main Street is known for more modest pay scales, especially because most Main Street workers are self-employed individuals. The words Main Street are used to refer to people who work in different cities and towns all over the country as small businessmen who cater to the requirements of small investors. A number of people who are a part of the Main Street may have once worked for the Wall Street and ended up losing their love for the place and left. They then rented an office and started their own independent business as an advisor or a trader targeting small investors. They choose the products they want to offer, and they can freely act towards the interests of their clients without getting caught up in corporate policies. These independent advisors put a lot of effort to ensuring customer satisfaction and try their best to create profitable products for their clients in order to lengthen the relationship with the clients. They have a lot in stake since they own the business. This is why the efforts put by such advisors. Independent advisors like these don't have a huge brand name and do not have big budgets or marketing departments. This means that some services may not be available with them, like buying IPOs, which are a high-profile service provided by major investment banks. Small investors who are looking for personalized services find such advisors to be more helpful. This is because their needs are limited, and it helps to have someone who is able to offer support on a personalized level to such investors. Staffing is relatively small in such offices, or it may be limited to just one member who is the owner of the business. Most small offices may specialize in specific types of investments. Investors can find out if their financial objectives can be met by a firm by identifying the products and services they provide. The financial services arena offers a host of products and services that are created to meet varied requirements of the investors. Main Street advisors tend to specialize in specific investments in order to target specific audiences. It has been noticed over a period of time that it is not the location of an office that matters, but the quality of services that are provided by them. Main Street represents the interests of the working or middle classes of the country, while Wall Street is representative of corporate America, which serves large corporations and some of the Fortune 500 companies of the world. The term Main Street is also used in contrast to differentiate between the ostentatious lifestyles of the Wall Street officials to that of the simpler lifestyles of the middle-class families of the country. Conclusion. No matter how much it has been criticized, when anyone in the United States thinks of investment, they first think of Wall Street. This is because of the image that has been entrenched in the minds of the people of the country. Wall Street has served as the largest financial market of the world, and it continues to inspire awe and amazement among people till this day. The street is, or has been, home to some of the biggest financial firms in the world. The New York Stock Exchange and Nasdaq, which are the most popular stock exchanges of the world, are located on Wall Street. The immensity of the buildings and the work that takes place in Wall Street is awe-inspiring. But big doesn't always mean better. Big companies can be impersonal since they work through a huge number of employees. Small clients without a lot of influence may find themselves lost in the maze of such big firms. Very often, Wall Street firms end up overlooking small clients in an attempt to provide their services to big clients. Losing big clients with a large net worth can mean trouble for the firm, which is probably what justifies their interest in these clients. But for the average small investor, this can be an unwanted experience. Wall Street's big organizations see employees come and go, and sales targets or decisions can often be driven by the policies and standards of the corporate. In order to ensure that they are able to earn a bonus, or to make sure that their company earns quarterly profits, the advisors may be coerced to sell financial instruments regardless of the interests or requirements of their clients. This creates a conflict of interest, something that the Wall Street is highly criticized for. Since the beginning of the wall that was laid down by the Dutch to the large firms that sit on the Wall Street today, it has always been a place where traders have displayed their financial acumen and played an important role in moulding the country's financial market. Having been the financial capital of the country, the financial district has many people who rely on the Wall Street for their jobs. Areas in the surrounding regions have grown immensely too. Not only does the Wall Street contribute to the economy of New York, but also to that of Midtown Manhattan and New Jersey. The Manhattan Financial District was the largest business district in the United States in 2011. With websites and online trading centers on the rise, the NYSE may not hold the same appeal as its early days, which is why new financial centers are beginning to grow and rise around the country and in the world. Trading and money management has become global, and Swiss bank accounts and Shanghai vaults have gained a lot of popularity in recent years. Wall Street remains a notable financial center of the world, but its opulence of the old times may have faded slightly with global markets becoming more robust.